What is up, YouTube? JP here. We had an awesome week last week. We pretty much crushed every trade beside the trades right after the FOMC meeting. I did take 3 losses on those. I went bullish, and woof, we entered in the bull trap, unfortunately. But more than made up for it the following few days. I usually trade things pretty slow, so I did end up taking a 4K loss on Wednesday. Um, Thursday, Wednesday I decided not to try to make any of that back just because it was so late in the day. Thursday ended up making back 2.5K, and then Friday we just crushed it. Anyone who was in the trades, we ended up closing the last trade out at 270%. Woo! Um, and if you follow my post, I'll go over why I was so bullish, even though the whole world was bearish. It's pretty easy to tell when there's going to be a reversal or when there's a heavy inclinations by the big dogs to want a reversal, rather. And when the big money wants something, it's a pretty solid bet to bet that they will get it. So because they had billions of dollars of put premium on the table that was expiring that day, we took the inverse trade, so we went long, ended up capturing 270% to the upside. Anyways, I did want to chart out some wave counts here. If you were in my Discord, I mentioned that the both of my paths I have both a bearish wave count and a bullish wave count, and in my Discord on Friday, when we were entering long at the end of the day, I mentioned both of my paths pushed up from here, meaning even the bearish path had upside. So I'll go over both of those real quick. I didn't do any of the details, but you can kind of see we had a 1 wave up, 2 flat, 3 up, 4 flat again, and then 5 up. And now we're either, so this could be 5 or it could be an extension, right? So this could be our wave 5 end here, but we still didn't invalidate anything, so it could still, this could have still all been 3, and then this could be 4, and then we could be entering into 5, so it would look more like 3, 4, which would actually make more sense, because with Elliott wave, you're supposed to have 1 flat correction, 1 steep correction, or vice versa. So this is pretty flat. So we had a 1 up, 2 flat, 3 up, 4 sharp, right? That would make sense. And then we would start to look into wave 5. But to have this should be a 3 count then, right? So it should be a B, C of some sort. But we're already pretty extended, meaning your average ABC, your C leg will be the same length as your A leg. We didn't have that, so if this was our A, this would be our B, this would be our C, right? And then we could expect to see upside from here to continue this way for the monthly OPEX to start expiring, probably directly at the level that we opened at the month before, which would be 4,700. Okay, so where was I? Sorry, this is where things get a little bit confusing for wave counts. So yeah, we knew that we'd see a push up. Now, if this is an ABC, we'll see a continued upside. And this upside should be very bullish, meaning we should be able to get some awesome trades on it with some extremely lucrative days, like 200, 300% days again. But good news, even if it's not, we'll still have the same thing. So let's plan for both. So if we are going to see upside today, we can expect that we won't break below 4350 on the S&P. We don't want to see that. Currently it's trading at 4400, so we'll give us a little more leeway, so we don't want to break below 4300. And that would kind of, like, we're okay. If we break all the way down to 4300, we're still okay. That's still pretty low. We don't want to get there. So we'd like to see, for the bullish case, us holding this 4350 mark. Now, from here, If this is our ABC, we could expect some consolidation within this range, and then a breakout to the upside. And this breakout to the upside would give us some awesome trade opportunities. As soon as we start to curl out over this 44.44 mark, we'll start to enter long, and as soon as, if we break below the 43.48 mark, we'll start to enter short. So that's kind of my trade plans for today, is to just kind of trade around this range, because I think that we have two paths. Path 1 is an ABC, which will bring us up, and then let's pull up path 2 real quick. So we'll go to our bearish chart. Path 2 would be a 5-wave push down, assuming this is wave 5. Now, for this, if we do have a 5-wave push down, a really cool way that you can gauge your fifth leg, or rather where your entry would be, is quite similar to our ABC entry, except for, let's go back to COVID and I'll show you what I mean. Look, so this is our COVID sell-off. So if this is our first push down, we're like, oh shit, that's a big fucking correction against the trend, so we're gonna measure it always. And that looks like an A at the start, right? But then we do our fibs, and we realize, oh shit, it didn't even come close to retracing the 61.8, and there's a lot more sell pressure, so it's probably not an A, right? Nope, it's probably a 1. Okay, now this will be our 2, and then our 3. And then how do we get our fifth wave length? Well, it's pretty simple. If we go high to low from the first leg down, we can activate that drawing. And we can bring it all the way over to where support was broken for our fourth push down. Boom. Right? So this is wave 4. And we're putting our length of wave 1 to there, and that'll get us our zone for where we want to start entering into wave 5. And sure, it is short by, what, 21.74 was the expected pivot, and it pivoted at 21.45, so you're off by 30 points, but that's pretty good, right? So we have a similar setup today. For today, we can actually do the same thing. We can put our trend line right up here, and we can start to gauge where we would pivot. So we're going to make an entry zone from the bottom of this wick to where support is, and I'll show you what I mean by that. So if we take this drawing, this is basically our support range from here to here, right? So all of this is a good bounce spot to take a trade. Now, this would be our bearish plan, is if we start to break below the 43.50, we'll start to enter, assuming that it will be a 5-wave push down, we'll find a new low or a double bottom, and we'll start to take our calls there. And if we break to the upside, we'll start to take our calls here. Anyways, you know, I apologize for my lack of editing, but these are kind of how I'm going to be viewing the S&P, and then over the course of today I will tweet out some more micro views, but this is pretty much my macro. Is we're either in an extended third with a wave 4 right now going into wave 5 of a degree, or we finished a degree, we're doing a 5-wave correction now going into wave B. But either way, it should be very exciting and very lucrative coming up. For today, we will be taking trades, but not for the first part of the day. It's going to be super volatile. IV will be high, and I'll post some trades to Twitter, so make sure to tune in. And then, yeah, I will add in the key levels as well to my Twitter post once I go back through and find those. And then, yeah, that's all I got. Like, subscribe, do all that stuff if you want. Anyways, let's crush the day. You'll get another 270% trade thrown out to Twitter. And make sure to jump into the Discord. I did open up the chat, which used to be only for premium members. I now made the chat for everyone. So even if you're not subscribed to my Discord, you'll be able to see the premium chat and talk with everyone. So it'll be much better. Thanks. See ya.